I've heard the term American exceptionalism quite a lot lately, along with the question, is it coming to an end? But what does it actually mean? And what does the exceptionalism refer to? Is it that America is a great country, that it has the largest economy, or that it produces great companies? In addition, when I read American exceptionalism, it also suggests to me that America is the only exceptional country, which doesn't make sense to me. In trying to understand the broader theme of this American greatness, I borrowed the term American Dynamism from a prominent venture capital firm out of the US, Andreessen Horowitz. American Dynamism is more descriptive for me. It means America's dynamic, that it shows progress, that it can adapt, and that it can create. All the way back to the adventurous Brits that arrived in the US in the early 1600s, to cowboys and the California gold rush, to the first skyscrapers and the atomic bomb. Americans have invented the light bulb, modern day electricity, television, the airplane, the transistor, and the microprocessor, and so much more. Americans are indeed dynamic. In trying to understand what drives US dynamism, let's look at the traits underlying America. There's individualism, there's accountability, there's risk and return at the individual level. There's liberty, there's the freedom of speech and the protection of private property. And there's innovation that drives technological advancement. So we've touched on America now, but what about the next two largest economies, China and Europe? China has its own type of exceptionalism. The speed at which China can copy, scale production and distribution and do so at a low cost truly is exceptional. While maybe not at the citizen level, central planning does allow the state to move very quickly and make decisions and execute those decisions without the need of going to Parliament or Congress or Senate. And the Chinese are very pragmatic. The 1970s Chinese leader Deng Xiaoping famously said, "I do not care if the cat is white or black as long as it catches the mouse." Unfortunately, there's not too much to say for Europe at the moment. There's too much regulation on the country level and coming out of Brussels. The market is very fragmented. They're putting all these countries together, but they still want their own identity. And the Europeans are more risk averse than China and America. So if I can put it down into one slide, the US innovates. About 2 years ago, OpenAI came out of nowhere and started this next wave in artificial intelligence. China replicates. DeepSeek, a direct copy to the OpenAI, showed that China could copy quickly, but could also do so at a lower cost and could be more efficient when it comes to energy and chips usage. Europe regulates. To give you an example, a while back, the European Commission introduced the straight banana rule, which stipulated that high-grade bananas had to be straight and not bendy. It took 2 years for Brussels to work through and process this rule. Fortunately, since then, this has been scrapped. So I'm going to change gears here, and I read this recently from Jeff Bezos, where he said the key reason why the USA has so much entrepreneurial success is that the country has the best risk capital where founders can raise $50 million, even if their business has only a 10% chance of succeeding. Successful venture capital firms understand that out of every 10 investments, in 9, they will lose all their money. But in the 1, they will be so successful that it will more than compensate for the 9 where they had losses. So if Jeff Bezos is saying that venture capital markets are quite key to successful entrepreneurs and companies, let's look at the venture capital markets of the US, China, and the EU. 1 in 6 companies in the S&P 500 were VC-backed prior to listing. These companies have been so successful that these same companies actually make up 50% of the total market value of the S&P 500. All the companies that you see here were VC-backed. So it's likely that if there was no VC in America, there'd be no Amazon, Apple, Meta, or Microsoft. In fact, if there was no VC, it's likely that there'd be no Magnificent Seven. The US is by a wide margin the largest VC market in the world by deal size. We can see that Europe and China are growing, but even if you put those two markets together, they're still less than half of the USA. The US has nearly half the world's unicorns. A unicorn is a startup that's worth more than $1 billion. It is still a private company and not yet listed. If we look at the chart on the left, we can see that the US has more than 4 times the amount of unicorns versus China and 6 times versus Europe. If we look at the Chinese venture capital market, the chart on the left shows you the amount of assets under management in the VC market in China. The red line is foreign funds invested in VC in China, and the blue line is local or Chinese funds invested in the VC markets in China. You can see that the local funds dominated the foreign funds, but that they've both come to a halt of late. On the right, we can see the number of new startups that have been founded in China has declined rapidly in the last couple of years. Why is this? Well, the venture capital market in China is largely state-driven. In terms of size, state-managed funds are 6 times the size of privately managed funds. And let me ask you this. Do you think governments are the best allocators of capital, especially those whose ideology is rooted in socialism? The answer is no. And this results in subpar returns and government interference. I recently read an FT article on the VC market in China and found 3 interesting quotes from executives who were working there. The first one said, "You don't want to be accused of losing the government's money." The next, "The party is throttling the private sector." And the third one, "Today, VC firms have to explain to the state why their companies failed and why they have lost the country's money." So this is at odds at what Jeff Bezos was saying, is where the successful venture capital firms understand the risk capital, that they are comfortable in losing money on some investments, knowing that they're going to have home runs with others. But there have been some very successful Chinese mega caps. But you'll note that their early VC backers, in large part, were foreign. Tencent, its early backer was Naspers, a South African company. Alibaba's backers were Japanese and Swedish. Baidu, China's version of Google, had American and 1 Chinese VC backer. Xiaomi, the phone maker, had also foreign backers. Huawei is self-funded. And TikTok is backed by Sequoia Capital, the VC firm out of the US. So let's look at the EU VC market. I'm now going to show you the 6 largest companies in Europe by market cap. LVMH, which has its roots in the early 1700s, is a luxury company. Hermes makes bags and scarves and is also a luxury company. Novo Nordisk, a pharmaceutical company, has shown some innovation in some interesting obesity drugs of late. SAP is a sort of old business software application firm. ASML, it's the one that stands out here for me. It is a really critical part of the value chain in the semiconductor industry. And Accenture is a consulting company. So when I look here, I don't see much exceptionalism apart from ASML. If I think of Amazon, which is 30 years old, it started as an online bookstore, then became an online everything store, and now 50% of its profits come from Amazon Web Services, a cloud computing platform. Similarly with Apple, which is 50 years old. It started selling computers, then iPods, then iPhones, and then AirPods, but now 40% of its business, or its profit, comes from services. This speaks to the risk averseness of Europe. It shows the amount of VC investment as a percentage of GDP. And you can see Europe is behind or below China and below half that of the USA. Let's look at some past and potential future investments in dynamic US companies that flagships global funds can access. Artificial intelligence is a result of American Dynamism. Now, we can think of the easy companies that would sit here, such as NVIDIA or Broadcom, but let's go 1 or 2 steps further. Artificial intelligence needs a lot of data to build its intelligence models, and hence it needs a lot of data centers. And if we see here, up to date, the US has more data centers than all of the other companies combined. And data centers use a lot of energy as they are very power hungry. On the next slide, I'm going to show you the planned data centers that are about to be built in America and for the rest of the world, and the amount of energy that these new data centers will require. For the new data centers, America is going to need an additional 17 gigawatts of electricity. For the rest of the world combined, their incremental energy needs are 7 gigawatts. To put this into context, 17 gigawatts is equivalent to the energy demand of 3 New York cities. So you can see now that America has created an ecosystem for where dynamic US energy providers can flourish. So if we look at EQT Corporation, that is an American natural gas producer. It is a 150-year-old gas company, but it is now one of the biggest providers of energy to the data centers in America. We bought EQT Corporation in October 2024, and in the 8 months since, it has returned 50%. Helion Energy is a startup that is aiming to develop fusion power, which is the holy grail of energy, in that it can provide clean and limitless energy. The sun works off fusion power. So this is backed by a VC, including Sam Altman, who himself is a co-founder of OpenAI, a very important company in the world. And he calls Helion the most important company in the world. One day, Helion is going to list, and Flagship would have access to buying their shares. Aerospace and defense. The US spends more on aerospace and defense than all the countries on the right combined. Again, this creates an environment and a platform for all dynamic US companies in the aerospace and defense sector. SpaceX, which is a private company founded by Elon Musk, but valued at $350 billion, has been a beneficiary. When it first started, the majority of all its revenue came from contracts with NASA and the US government. It's difficult for me to imagine that SpaceX would be as successful if it was operating outside of the US. Again, one day SpaceX is going to go public and list, and Flagship will have access to buying their shares. Lockheed Martin, they build the F-35 fighter jets. They also build the SR-71 Blackbird, and they're about to deliver the SR-72 Darkstar, pictured here, each one worth $1 billion. The SR-72 Darkstar is hypersonic and can achieve speeds of Mach 6. That's 6 times the speed of sound. That means that you can get on a flight from here in South Africa to the UK in 1.5 hours, or from Cape Town to Joburg in 10 minutes. The US is also at the forefront of biotech. Neuralink, another company founded by Elon Musk, can translate thoughts into action. Gilead Sciences has developed a prophylactic which prevents 100% of infections. An Alphabet or Google subsidiary, DeepMind, has developed tailor-made drugs to treat cancer and Alzheimer's. Intuitive Surgical is the developer of the Da Vinci robotic surgical system. One of the benefits is that the doctor can be sitting in New York City operating on a patient sitting on a bed in Dubai. The other benefits include that the doctor or surgeon can be seated whilst performing an operation, which helps a lot when some operations are 7 to 8 hours long. The doctor or surgeon can also has enhanced vision and also has increased precision, as the pincers at the end of the robotic arms gives amplified touch feedback to the surgeon's hands. Each circle here represents a unicorn in the tech sector alone. And given that these are startups, it does mean that at some point in the future, say the next 5 to 7 years, these companies will list. It shows that the US can expect to continue producing disproportionate amounts of dynamic companies that Flagship's global funds can access. So why Flagship? Flagship is a specialist global manager. Flagship's first fund was in 2001, and it was a global fund. Now, many of the South African fund managers first started investing locally, and later in their timeline started investing in global funds. So that's where one of our differences lie. Global funds are in our DNA. We have a 25-year track record, and we've been fortunate enough to be one of the most awarded boutiques in South Africa. Thank you very much for listening to the discussion, and I hope you found it insightful.